Ah, woo. Okay. Hey guys, this is Chandra Lake. I am a licensed mortgage loan officer with NEXA Mortgage. I'm also a real estate agent here in the state of Michigan, and I am coming on today just to kind of shoot some time away as I wait for the kid to get out of basketball practice. What better way to come on and just give you guys some tips, some of the things I've experienced as a mortgage loan officer on how you can pay for your down payment and your closing costs. A lot of people get a little anxiety when it comes to the down payment and closing cost, but there are multiple ways that you have the opportunity to be able to pay. To come up with the cost to pay these fees that are associated with purchasing your home. So there are various strategies that will actually help you reduce these costs. So here are 5 effective ways that I've encouraged clients to be able to come up with the down payment and also to cover the closing costs. Okay, and I'm outside, so you might hear we got a football practice going on right here. Then we got cheerleaders going on over there, and then out here on the track and field, we got people walking around. Okay, but I want to talk about 5 effective ways. I'm going to start out with the first way that I actually love, what I love to do. And that is down payment assistance. Down payment assistance is usually a program or organization that gives money to those potential buyers to be able to purchase their home. Sometimes they'll have some qualifications. Sometimes it's first time home buyer. It could be income dependent. It might be based on your occupation. For example, we have those that will actually give funds to essential workers or medical professionals, firefighters. So down payment assistance, it can come in 2 different forms. It can come in the form of a grant, or it can come in the form of a loan that is kind of laid on top of your mortgage. I love the grant. I love the grant because you don't have to pay it back. You can stay in that property for as little as you need to, or as long as you need to. And if you decided to sell it, you wouldn't have to pay it back. With regards to a loan, they sometimes will have a forgivable loan or an unforgivable loan, and a lot of times they'll require you to stay in the property for a certain amount of time or number of years, and if you decide to leave before that time, you'll have to actually pay it back. So down payment assistance programs, that is my favorite way to help clients to get into a property and save some of their cash to help with closing costs. The second most effective way is seller concessions. Now, I know we went through a season out here in a lot of the states where getting into your home, sellers were not necessarily willing to give up some concessions, which means that they'll actually walk away from the table with less revenue than they would if they weren't giving you anything. And in a seller's market, sellers are least likely to to help the buyer to pay for their closing costs. But what a seller's concession is a seller can agree to pay a portion or all of their buyer's closing costs to help facilitate the sale. And how do they do that? So this comes with the help of your real estate agent. They negotiate this as part of your purchase agreement. This is more likely in a buyer's market where sellers are eager to get the deal closed. So if you're in the seller's market, you may not even want to even bring that up because they may not even be looking at your purchase agreement or your offer. But in a buyer's market where their house has probably been sitting for a little bit of time, they may be more likely to or more eager to negotiate this as part of your purchase agreement. Each type of loan has a certain amount or percentage that they will allow a seller to provide to you to help with closing costs. But a lot of times again, if it's in a seller's market, they're not even really willing to broach that subject. But if it's a buyer's market, usually they are. So the pros of this is that it reduces out-of-pocket expenses for your buyer, but it sometimes may result in a higher purchase price. So that's number 2, seller concessions. The third way, excuse me, I'm out here I should have brought something to drink, but anyway. The third way that you can help pay for your down payment and closing costs is through lender credits. Lender credits. Um, I like this way as well, because anything that'll help my buyers to save money that they can use, as a cushion for when they get into their property. I love to offer those type of incentives, or give buyers options to be able to save a little bit of their own cash. But lender credits are another way that a buyer can use to help with down payment or closing costs. Your lender, such as myself, can offer credits towards the closing costs in exchange for a slightly higher interest rate on your mortgage. And I'm not going to go into the interest rates because then I'll have to give a disclosure. But a lot of times, the trade off is that you may have to get a higher rate. And with that rate, they'll be able to give you credit back at closing, to help lower the cost, lower your closing cost. Um, so usually this option, we kind of discuss this option as we're going over what your rates are once we get a full application. So some of the pros and cons is that it reduces your upfront cost, okay, but it may increase your total interest paid over the life of your loan. Okay, so that's number 3, lender credits. Number 4 is gifts from family or friends. Now, if you have generous family, generous friends, they can actually gift you money to help cover some of your closing costs. Um, if you're asking for financial assistance from your family or friends, what we'll do as the lender is that we'll give you, we'll help you, to kind of give you the gift letter so that you can give to your family or friends. Usually, we have a formatted template that will pull from the lender itself, and then we'll give that to you so you can give to your family or friends. And the reason for this is that the lender wants to make sure that you're not taking out another loan on top of the loan you're about to take out. So the family or friend has to confirm that the money is indeed a gift and it's not a loan. The pros and cons of this is that it provides direct financial help, obviously, without repayment. But it depends on, obviously having willing family and friends. Some people don't have that sphere around them where they're able to tap into relatives or friends to be able to help pay for closing costs. A lot of people don't have that excess in their bank account to be able to gift that to someone, and so that's a con. So a lot of people don't have that. Number 5 is to use your own personal savings or liquidating assets. So, what does this look like? If you don't have personal savings, a lot of people have used their retirement accounts, because a lot of retirement accounts will allow you to take out a portion of your retirement assets in order to purchase a home. So, they consider that as something essential that you'll need. And so, they'll allow you to take out money if you don't have your personal savings. How to obtain it? Obviously, we'll ask you for confirmation that you've had that money in your bank account. So a lot of the money that's in your personal savings or personal checking, it has to be seasoned. Um, and seasoned mean it has to be in your account for at least 2 months. Because they do not allow you to get just spontaneous large deposits in your account. They want to know the source of that. They want to know where that came from. And that was put into place to help to decrease the amount of money laundering that was happening, and various things like that. And so the pros of this is that it doesn't involve any debt or repayment. And obviously the con is that you're going to deplete some of your savings, right? So the goal is to help you get into this house and also still have a cushion. So as you compare multiple lenders, which is what we do. I am working with NEXA Mortgage, which is a brokerage. We're also a lender, but we have the opportunity to compare multiple lenders. We have over 200 lenders that we are partnered with, wholesale lenders that we're partnered with. So we're able to actually shop for you, to find the best deal, to find the best, to negotiate the best deal on your closing costs as well. And so we'll help you understand what your fees are, and then we'll also, if you start early enough, I like to start with people at least 6 months in advance so that I can help you plan ahead, show you how to save, show you how to budget for your closing costs in advance so that you're not looking at last minute financial stresses. So I'm confident that if you put these practices, keep these things in your mind, that you can manage and reduce the financial burden of closing costs when you're getting ready to purchase your home. Again, this is Chandra Lake. I am with NEXA Mortgage, a licensed mortgage loan officer with NEXA Mortgage, and also a real estate agent. So if you have any questions, I would love to hear from you. If you're ready to take that next step, you can go ahead and look in the description section. I do have the link to apply for a loan, and also a well forgotten, not everybody knows about this, and that's the HELOC. I have a link to that as well. That is a home equity line of credit. So it's like getting it's like having a credit card in your home. The rates are better than an average credit card, which has what average credit card has a rate of about 29%. So using your home for revolving credit is another way that you can tap into bringing extra cash into your home. So there we have it. I'm Chandra Lake, and I am getting a little bit itchy out here with these bugs. So I'm going to sign off now, but I hope that this was helpful for you. If you have any questions, you know where to find me. All right. Talk to you soon. Bye-bye.